Order flow is the foundation of those 10 perfect trades. When you stack order flow in the same direction from 1 day to 2 weeks to 2 months, and even longer than that, you start to see how long has the smart money been buying this stock. Is it 1 day, 1 week, 2 days? I don't know, but that's what we need to determine, right? An edge that's always on the right side of the smart money. Now, how can I say this? How can I say that order flow is always on the right side of the smart money? Because order flow is the smart money. The smart money is the market. Benjamin Graham called it Mr. Market. The smart money, the market, is what pushes the stock from $50 to $70. It's what pushes NEO from $19 to $46 in 3 weeks. It's what makes all those solar stocks explode for a month. And then when the smart money leaves the table, that's when we go into something else and we take a look at the energy stocks. And that's a big part of working with us too, is that sector rotation. The tape has changed. Stop trading those stocks. Look over here. These ideas are a lot better. That also keeps you out of trouble. Okay. All right. So I want to talk about where order flow came from. So I talked about before with the specialists, but now I'm going to give you a little bit more detail of how I started doing this in April of 2000 when I was trading off of what is known as a level 2 box. This right here, GSCO, is Goldman Sachs company. That's their market maker ID. When we were trading back then, we would be looking at a level 2 box and we'd be saying, okay, we're seeing a lot of red on the time and sales. This is active trading, and they're selling and they're selling and they're selling. And all of a sudden, Goldman Sachs is the only person there buying stock. They're like, I'll take them, I'll take them, I'll take them. We would shout out in the room, this stock is well bid. Goldman Sachs is holding the bid. So as the years went by and everything started to become a little more electronic, that same thing wasn't as easy to do because it was a lot more electronic. It was a lot more algorithmically driven, like all the computers and everything. But the edge was gnawing at me for years. That how do I use what I used in 2000 to spot the smart money? How do I do that today using charts? Okay. Here's what we came up with. Okay. Here's what we came up with. What we're going to show you right now is something you can implement immediately. It's the foundation of being in good trades. It's the foundation of understanding which trades to stay away from. So if you want to take a screenshot of this, I'm fine. I know everybody does that every webinar, every training session that we do. But here's what I want you to walk through. Remember how I said before that Goldman Sachs was holding up the stock. Goldman Sachs was sitting there saying, I'm going to keep buying them. But what we want to notice on charts, and trust me when I tell you this, this is as simple and it doesn't need to be more complicated than anything that you need to do. If a stock is well bid, if your favorite stock is well bid, that means the smart money's involved. That means there's activity. That means there's attention on that stock. Well bid means higher highs, higher lows in that stock. This could be a 5-minute candle, 2 5-minute candles. This could be a day. This could be a week. It could be a month. But what are we looking for here? You want to look at a chart immediately in a heartbeat and say that stock is well bid because right now they are creating new highs and they're holding the bid higher. So here's what I want to do right now very quickly. Does everybody understand that? And the opposite of that is well offered, pushing down to new lows and pushing lower highs. Does everybody understand that? Yeah, it's obvious, John, but not a lot of people trade off the information. That's the big thing I want to get across. Chart reading is not complicated, but making money is different. Everybody on this call knows that. So now here's what I want to do. And I want to do this very quickly. So we're taking a look at Wells Fargo. So now we know what order flow looks like. Now we know what well bid looks like, right? So we're looking at a daily chart here of Wells Fargo. So you can see now on 1 day to the next, look at this 4-day period. Now, how many times have you been involved with a stock and you feel like every single time you put a trade on, it's moving against you? We talked about that before. We all did that, right? Every one of us have done that at some point in the past. However, what if it doesn't look like this? What if it doesn't rally and then go sideways and go rally and go sideways? What if you had this kind of price action for weeks? Let it sink in for a second, because the difference between looking for stocks that are well bid from 1 day to the next, well bid from 1 week to the next, well bid from 1 month to the next, That's where the smart money is staying. Okay. Now we're going to get into tape reading a little bit. This was obvious, right? Can everybody look at a chart right now and say, okay, well bid means smart money is holding higher lows and creating higher highs. Can everybody understand that? Can everybody look at a chart in a heartbeat now and say, this is well bid? All right, now, what about this? What about this price action? How many people were trading this aggressively 1, 2, 3, 4, 5 weeks, but did not recognize that it wasn't the same picture anymore? How many people did that in Tesla, where it was super obvious, and then the smart money left and you kept trading it like it was still obvious? We've all done that. Now, let's say that you are super smart, right? Let's say that you're super smart and you can definitely see the difference between those two. Remember a couple of minutes ago where I said your winning trades are killing your P&L? This is what separates somebody who wants to be a better chart reader from somebody who wants to be a better trader. Because when you recognize the order flow, there's more money on the table. It's your job to piggyback the smart money while they're active, because when the market shifts and starts to do this, it shifts into a consolidation, it shifts into indecision, whatever label you want to make it. And you're complaining about how tough it is to trade here. You're crying to your husband, your wife, your girlfriend, your boyfriend about how hard trading is right now, and you can't make a dime, and you might have to go get another job. You want to know what the problem is? The problem is not here. The problem is you didn't make bank here. So John A., you absolutely said it before, it's obvious, but I'm telling you right now, that's the difference between somebody who makes money every month and somebody who is frustrated and can't make a dime because they're not trading the order flow. They're just trying to make money. You have to first find amazing opportunities. Only then do you start to look for entries. But I'm telling you right now, I challenge anybody. I inspire you to go do it. From the first moment you look at a new chart, you need to be identifying order flow. Is it obvious or not? Okay. We're not going to go into any chart stuff tonight because I don't want to look at everybody's charts tonight because we'll be here till midnight. If you want to follow up with that afterwards, 100% we can take it. So everybody understand, Goldman Sachs, as an example, is buying that stock. So Goldman Sachs is buying that stock. It might be Merrill Lynch. It could be anybody, right? So when that stock starts to move and you start to see well bid, and I want you to remember this, okay? I want you to remember this. The losers are not the problem. The trading range is not the problem. The problem is you didn't recognize the order flow and make as much as humanly possible so that those small losses don't matter. Doesn't that make sense? Doesn't that make sense? We already admitted 5 minutes ago losses are a part of great trading. The problem is not making enough when it's obvious. That's the stage we all want to get to.